And I love hearing you already talking from the standpoint of splits and preferred return and equity and all these things that basically are leaning towards private investments. You know, you and I have talked about this before, but I'd love to know your opinion on conventional investment wisdom and stock market investing. You and I are very similar in the fact that we don't do
Yeah.
much of that and that we see a lot of value in having more control and having greater upside and just really being able to find deals that otherwise wouldn't exist in the public equities. But I'd love to hear you speak on that.
So I talk about degrees of separation from our money, the money that we make that we want to invest in something. And so you think about your one's primary business, whatever that might be, doctor, dentist, butcher, baker, candlestick maker. You've got a business, right? So you're that solo entrepreneur. So in your business, however you run your business, invest money in the business, whether it's expansion or more labor or technology or whatever. You have direct control. You are making decisions right there. You've got the most control of that money, good or bad, right there. Now, let's stretch it all the way out to Wall Street. Okay, that's what I call 2 degrees of separation, because I don't get to sit in the boardrooms with GM or whoever I'm investing with, on the market. I don't get to sit there with them. I don't get to get the insights. Yeah, I got reports, but I don't really get to see really what's going on behind the scenes. So in investing in alternatives, private capital, I'm just 1 degree of separation, because you and I both know with direct investments and alternatives, we actually get to spend time with the person, the people, the company, the culture. We can dig as deep as we want to in understanding what their track record is, how they think, what they're looking ahead as far as market risk reduction in their model, because I want to hear that. I want to, yeah, times are good right now. Huge opportunity, right? Whatever it is, it's like, great. But we both know, or we all know, there's going to be a correction. So how are you mitigating? See, I can ask those questions. I don't get to ask those questions on Wall Street. I just have to kind of take my financial advisor's best guess. And does he or she have any more direct connection? They might be able to read reports better than I can, but what do they really have that I don't have? Really nothing. So it's degrees of separation of your money. If you want to be ultra super passive and you just want to play that abdicate your financial future, they make it easy, don't they, Justin? I mean, save on taxes, put your money in the 401k, the cash balance, defined benefit plan will save you money all day long, and it's all going to be good. And so people start doing that on a disciplined basis, and they think when they're younger that, yeah, it's they got my back, they got my back. And then it's sad when I talk to dentist colleagues who are in their late 50s, early 60s, and they're not there. In fact, they're not even close. And I think about the fact that they had literally the private practice dentist, just my example, over, let's just say 25 years, 30 years of practice in their private practice. They probably ran an average over those years of about $1 million a year gross. Okay, so let's call it $30 million. And to see what little they have left, there's a problem with that plan. It doesn't work. So I try to wake people up early in life and say, look, you can choose. You can choose. You can take the model of the mainstream America that will always be there to tell you, yep, put your money over here, save money on taxes, defer, defer, defer. Or you can take the other path, which is going to take you a little bit of time in developing the access points, the people, the network. Yes, you're going to have to invest in yourself and buy your way in to those groups, those people, because that's what you and I've done. But that investment pays dividends over and over and over again for the rest of our lives. And there's no better investment than that. I almost can't stand it when people ask me, should I keep putting money in the 401k? And I go, I mean, if that's the only thing you're going to do, then yes, by all means do it. But do you want a different life? Then you've got to shake that cage and stop going down that path that everybody says is the way to go. Because you do that, you're going to live an average, mediocre life. And that's not what you signed up for.
Yeah, it's that whole idea of better than, if you're only going to invest in a 401k, that's better than not investing. But if you really want to find something better than a 401k, there are endless options out there. And I think that, you get into trouble when the advice is, oh, just defer. Well, in this case, you're deferring. If you're going to be retiring soon, you're deferring into a much higher tax rate. And I actually think it's going to continue to get higher. As this new administration comes in, as the next new administration, over time, as the deficit of our government grows, they're going to need to find those dollars somewhere. So I just think it's going to be higher tax in the future. So I don't know if the best answer is to defer.